Welcome to the Swing Trading with Cycles channel. It's January 6th. We're going to talk about the broader market today. It's the last trading day of the first week of 2023. So we have a complete weekly candle. Market has closed as of the recording of this video. We're going to look at the S&P first. And we talked about in our last video, as always, look for a pinned tweet with a bunch of links to the previous video. So you can take a look at all the previous videos, sort by date released to get caught up. And you can also get up to speed on cycles analysis and understanding swing highs and swing lows. If you're new to this channel, it's all about trend analysis. And in order to analyze trends, we use price action. And the central premise is that prices trend. It's that simple. Sometimes prices are trending up, sometimes they're trending down, sometimes they're consolidating sideways. This is a perfect example of when they were consolidating sideways, as we talked about in the previous video. This is a virtually identical pattern for the different indices. We're going to look at SPX, we're going to look at QQQ, we're going to look at the Dow, and we're going to look at IWM. So this is the S&P first. This is our daily chart. And in the context of daily cycles, we got our low on day 49. That was December 22nd. And the thing is that we've been just kind of consolidating more or less inside the range of that candle, right? Like we poked above it. We haven't really actually poked below it yet, which is why it's holding as the swing low. But we poked above it a few times, like here, and now we've closed above it, above the range of this candle at least, on day 9. So we've made a new high on day 9, and we actually wicked above. And I just drew these lines just to give you a general sense of like the range of this, like, you know, sideways action. And so there's absolutely no reason why we couldn't get a Monday candle like that, right? And then a Tuesday candle like we could continue this consolidation. And in fact, I think it wouldn't be surprising if we kind of did continue a little bit of consolidation until the next CPI release, which is this line here, which is next Thursday, January 12th, right? And so we'll have to see. So far, certainly this is giving a signal that it's breaking to the upside, but we're going to have to see. The thing that's bearish about this is that we've already wasted 9 days of just going nowhere. I mean, let's see, what is the percent gain so far here, actually? So let's just say from the Pico bottom to here, we've gained 3.7%. That's not small. I mean, we're obviously talking about an entire index, but I mean, this has just been like, you compare that to like the rally off of this low to like, let's say here, right? Or even here, right? Like, this is just not very exciting. That said, because everyone has gotten frustrated during this period, this is going to lead to an explosive move. And so if the move is going up, then we're probably going to go up and at least like test this local low here, right? Or excuse me, this local high, which was our daily cycle high. So we'll have to see. But again, I think the CPI release will be an important number. And I could see a world where we actually continue to move higher into the CPI release, right? So like we do something like that, and then we make the move lower, right? Like that's our catalyst lower. Like we continue kind of to drift higher into the number. Like, because this move here is trying to break out of this consolidation. We'll have to see. That would be day 13 of the cycle. And so that could be your daily cycle high. It's possible that today is going to be your daily cycle high. But that's the point, and that's what I mean when I say this is bearish, is that it's almost like it's wasted time, right? Because we know every rally has to end at some point. And if this is day 9 of this quote-unquote rally that's like already very feeble, it just means like we've already chewed up a lot of time. And so we could just be setting up for a left translated daily cycle. So that's going to be really important to watch. And if we look at the weekly chart, that's going to really give us our cues, right? So let me just turn this red so you can see that. That might be helpful. And so you can see on the weekly level, we're trending lower as well, right? Just like, just turn that. So it's the same concept. So the same way we had that high on day 41, we've had a high on week 9 here. That was the day of the CPI release. Like we had a bearish outside weekly candle, big sell signal that I tweeted about at the moment. And then we just consolidated, as we talked about for the previous videos. But then what have we done here? What have we done? That's right. We've made a higher high on the weekly chart. So that's important to be aware of, because what that means is we're trying to start an uptrend on the weekly chart, right? We're trying to do something like that, right? That's the goal. Now, obviously, to have a uptrend on the weekly chart, we need an uptrend on the daily chart. And so, as we just talked about, that when we get the high for the daily cycle is going to be the point where this weekly cycle, or excuse me, this weekly rally is going to get tested, right? Or if we really are getting a weekly rally, right? Like this is trying to set up for, you know, another candle of continuation next week like that. But again, we're going to have the CPI number. And so you could see a world where the candle starts the week looking like this, and then we get a bearish upper wick because we get a pullback on the number and we fall. The other thing to be aware of is that we have the Fed meeting coming up. I'll actually draw that here. I believe that is the 1st of February, right? So it's going to be like the announcement will be the 1st of February. So let's just draw that here on this chart. It's just always to know, it's always good to know where those catalysts are. And so what day of the cycle will that be? That's always just good to know, right? So that will be day 26. So you could see a world where, and again, this is just a scenario, not by any means a prediction, but that's how you kind of think about these, right? Like, what are the different scenarios? And as you see price unfold, which one does it look, which scenario looks like it's playing out? You could see a world where we continue to rally into the CPI number, right? So something like that. Then we get our decline. And then we actually get our low somewhere around the Fed meeting. And then we get a rally. Now, it'll be anyone's guess if that rally is going to be sustainable or if it's going to be left translated and send us into another lower low. But that's what's kind of setting up here, right? I mean, the alternative also is that we actually start to move lower next week. And then maybe we actually bounce on the CPI number. Either way, it's really, really likely that CPI release is going to be... it's really likely that the CPI release is going to be a catalyst for something, right? Either some kind of high or some kind of low or some kind of continuation move as well. So you really, again, you're just kind of thinking about all these scenarios at the same time and watching price action in real time to see, you know, when, like, which scenario is kind of playing out right now. And therefore, how should I position myself is the way I kind of think about it. Just get rid of that. Just gonna add that there. Just move that over to February 1st. Okay. FOMC meeting. So now let's move over to the monthly really quickly. And we have a green month. That's important to know about. And you always know that you can always, like, you always want to be aware of the opening price of the candle because that's how it, you know, it's green or red. Above the opening price, it's green. Below the opening price, it's red. And so we've managed to go green, which is good. This rally today did that. And so we want to continue to watch that level. So for the S&P cash, that is 38.53.29. So above 38.53.29, it remains a green month. It's still just an inside month, though. We are inside the range. We're inside the range of December. So not really doing much until we get out of that range. And so that's going to be another thing to watch for as the daily cycle develops and does things to the weekly cycle. It's going to either push us closer to the top end of this range, which is going to be a big test around, what was that high, that 4,100 level, which is why you could see any rally could be capped at that level. But more likely, we don't get all the way up to 4,100. We just kind of almost get there and then we roll over if we are going to roll over. So really important numbers to be watched, levels to watch. And in terms of the cycle, if we are still declining into a major long-term low, this is month 34. Again, we want to stay open to different possibilities, but we know what levels to be watching to understand key pivot points. So that's the S&P. Let's move on to the Dow. We're going to look at the DIA. That's the index that's the an ETF that tracks the Dow. And you can see we made a new high today. Same exact pattern as the S&P for the most part, except notice this is a much higher high than the rest of these like this cluster. All that to say, as mentioned in the previous video, the Dow is the index that is the strongest, right? That looks most like it actually made its major long-term low in October. Again, the Dow is the only index that actually looks right now like it already bottomed in October. And so it's not surprising that this move up on Friday when, you know, all markets are rallying off the, the jobs number, that the Dow was the strongest. It made the highest higher high in terms of like you can see it's not it's a significantly higher high versus these highs, right? And as we look at the weekly chart, I think that's a bullish outside weekly candle. Is it? So the low is 328. Yeah, so this is a bullish outside weekly candle. Very bullish pattern, which definitely suggests more upside next week. But of course, we have that big catalyst on Thursday, so could get a reversal around the end of the week. So you want to be aware of that, want to be careful. But again, if we look at the monthly chart, look at that swing low that we have in place right here. This could be the bottom, right? And so to be clear, that would make this month 3 of a new long-term cycle, with the last cycle bottoming on month 31. And importantly, it rallied all the way up to month 22. So another way of thinking about that is this, like imagine getting into this rally. So this rally lasted 22 months. Imagine being in on this rally on month 3. That's the whole point of this channel, right? Understanding how to get in front of, get into an uptrend when it's relatively early so we can ride it for months. And when we say months, we mean really years, right? For like for like dozens of months, right? In this case, almost a full 2 years. In some cases, you can get a rally for like 30 months, right? If you're talking about some kind of 4-year cycle, for instance. So the Dow looks like it may have made that bottom. So it's got to make a high above last month's high at 348. That's obviously a pretty big upside move already, like before that kind of confirmation. But it's just like the S&P. It's an inside month until it breaks out above that. Let's look at the Qs to get those levels. And we're going to have to switch back to light mode because that's where I have the counts. I haven't updated them all yet. The Qs is one of the weakest. It's weaker than IWM. And so the Qs, this is really important. The Qs are the weakest, and you can tell because it didn't even make a higher high today. Like, that's super important. It is still above the swing low from day 49. So in this case, that's December 28th. Right, because the S&P made its bottom on the 22nd, right? That's right. So the S&P made its bottom on the 22nd, and then it actually made a higher low on the 28th, whereas the Qs made a lower low. So again, another indication of weakness, right? The S&P was able to hold above this low, and the Qs could not. And today, the S&P is making a higher highs, and the Qs cannot. I mean, there aren't many more ways to look at like relative weakness, or I should say relative strength. Just incredibly poor for the Qs. And when we get the next leg down, the Qs are probably going to be the place to be in terms of shorts, right? Because it's the weakest here on this way up. And so far, the high for the Qs for this daily cycle is day 3. That's a high at, what is that? 270.15. And today we got to 269.94. So we missed it by about 21 cents. Wow. Now, we probably will get a higher high at some point, I imagine. Like we probably will get this higher high here, like a little rally next week. But we'll see. Either way, this is really a telltale sign, right? The other thing is that, remember, the S&P was kind of like really chopping around very sideways, and the Dow the same way, like almost perfectly sideways. This is much more vertical and to the downside, and so just all bad signs. And for the Qs, it's the same count. It's week 12, and notice the S&P and Dow, nice green weeks. Qs just barely closed green, like a little like ugly doji. But nonetheless, a move above 270.15 does give us a weekly swing low for the Qs. And just to be clear, I'll just call out that level on the S&P. That's what we're setting up for, right? Like, well, actually, in this case, for the S&P, just to be clear, we actually created a weekly swing low here, right? Like, by making the move today, like the week of December 19th, that's the week that we have the daily cycle low on, has become a weekly swing low. That's a higher low, or excuse me, a higher low than this low here. That's our weekly cycle low. Another way of saying, I mean, that is potentially bullish, right? You want to make sure that you understand all sides, right? So we made a high, we made a low, that's a higher low. We made a high, and now we're making a low, and it's still actually a higher low. And now we're trying to do something like this, right? And so like you see like that, like this is actually still a higher low than this. I mean, just barely. You definitely don't prefer a big move down like this. But so far, this is okay. Now we do have to get back above this first. Like we have to get back above that to be fully in an uptrend. But that's what we're kind of setting up for. And it's the same thing across all the indices. Again, I would say the Dow is the way to play to the upside, and the Qs are the way to play to the down once we get that down leg. So right to be long the Dow now, right to be short the Qs when we get that resumption down. And obviously the Dow will go down as well. The expectation is that it would theoretically make a higher low, the same way the S&P didn't make a lower low on that daily chart. And same kind of count on the monthly for the Qs. It's month 34. And notice we're much closer to the lows from December. So this thing is a whisker away. That low is at 259.73. We obviously got a move up today to get us off that a little bit, but still a pretty big harbinger. And the high from last month was 296.88. So we'd have to make quite a big move, about 30 points from here. Unlikely we're going to get that. But good to know like what the hurdle that we would have to climb. And finally, we look at IWM, the small caps. So the small caps did make a higher high today, unlike the Qs that could not on day 6. They are also like it's the same kind of story, right? The Qs also made a lower low on December 28th. So their daily cycle is day 53, lower low than the 22nd, whereas the S&P held and the Dow held. And so it's day 6. We did make a higher high above this kind of cluster. But again, notice this is much less sideways than the S&P and the Dow, where it was like much more sort of textbook, really like textbook consolidation indecision. So this is also kind of showing, again, weakness relative to the other indices, similar to the Qs, but not quite as weak. And for this guy, you can see the month is actually a little bit greener than it is for the Qs. So also another positive. So definitely not the weakest of the bunch. I'd say, I guess, the third weakest of the bunch. And this is also creating a weekly swing low. That's important to know about. Again, as we talked about for the S&P, it's the same pattern for all these others. That's bullish, right? To create this, like, now again, in an ideal world, you avoid this big downdraft in the first place, but being able to hold this low is the next best thing, essentially. So that's really important to be aware of as we get potentially a continued rally for next week, and we kind of see where that goes. And the last thing I'll do is I'll show a quick ratio chart. So on the left-hand side, this is SPY, the SPY index. And on the right-hand chart, it's SPY versus DIA, which is the chart for the Dow. And you can see this is a monthly chart. And you can see the absolute chart for SPY. We've obviously been in a downtrend since January, as we've been talking about on this channel. But my God, this thing, first off, it actually topped out in December, so a month early, right? So whereas this thing, the S&P went on to make a new high. And this is the ratio, excuse me. This is SPY divided by the Dow. So it gives you a sense of is S&P outperforming the Dow or vice versa. So if you needed another way to quantify the outperformance of the Dow, this would be a good way to do it. And you can see, again, the swing high that started this whole downtrend in the ratio of SPY to the Dow happened in December 2021. And of course, the top for the SPY, and it's in general, in absolute terms, happened in January, which means this kind of led that move down. And you can see this is obviously much more vertical, just kind of almost a straight shot down, obviously with these lower highs. So just another instantiation, just another kind of really visual representation that the Dow is the place to be until this starts to turn around. So we'll be watching for that on this channel and continue to give updates. But we'll leave it at that for today. Thanks for watching.